Hi everyone, thank you so much for joining us today. My name is Soka Yus. I am a financial wellness counselor here at Mayo Employees Federal Credit Union. So whether you're watching us live online now or a little bit later, you're more than welcome to ask your questions anytime. If you're live, just submit your question and I'll go ahead and answer it to the best of my ability. But if you're a little bit shy right now, you're more than welcome to go ahead and send me an email. This is my contact information, and we can, discuss things a little bit more personally. So today we're going to talk about a parent's guide to teaching kids and teens about money. So as we know that it's really, really important that we teach our kids about money as early as possible and to be transparent as much as possible, for their age. So a lot of times when I meet with people and they say, you know what, I never got any lessons on how to work with money or how to deal with money until I got into trouble with credit cards or until I got into trouble with debt. So this is something we try to avoid. I mean, just try to tackle ahead of time. It's just to address your, some financial questions for yourself, and also an opportunity for you to question yourself. What is your relationship with finances? How does that relate to your parents? And how are you going to be able to pass on your knowledge and your habits on to the next generation? So at any time, if you have any questions, again, please feel free to interrupt or send me an email. On today's agenda, we're going to talk about money management, just an overview of it, earning money responsibly, also spending money responsibly, making smart spending choices, financial choices to consider, building credit awareness. I know that it's going to, it's kind of early to teach them about credit cards, as early teens, but I think the later teens, 15, 16 to 18, it's really important that they understand how credit work and how it affects their life pretty much for the rest of their lives here, in the States. So building credit awareness is really important, and we can do a little bit of exercise there too. Talk about saving for the future, which is really important. We want to instill, the focus or the thinking of planning ahead of time, having financial goals, what to save for the future, how much to save for those things. And we'll talk about a little bit about parental guidance and support and developing skills for financial independence. So a little bit about money management overview. Why is it important to teach kids about money management, right? So I think money is all around us, as we're aware, pretty much everything that we touch every day, we have to spend some sort of money. Whether you're not physically swiping, your debit card or your credit card or paying in cash, you're still kind of, it still costs to live day to day, right? So you may not, your mortgage may not be due today, but if you think about it, if you break up your mortgage over 30 or 31 days, it's still going to come out to that daily living. So it's really important to kind of break up your day, kind of view your money on how it is, how much it costs to live per day, right? So if you're spending $14 for lunch, that's $14, of lunch, and how much is your percentage of your mortgage for that month, for that one day out of the 30 days, your car, your fuel, everything that goes into it, the clothes that you wear, the shoes, everything that you do costs money, right? It may not be direct money that instantly, that same day, but eventually it's just money that's an overhead of money that it gets sprinkled throughout the day. And so it's really important to teach them about financial literacy. It's a vital skill, life skill. Again, as a financial wellness counselor, when I meet with people, pretty much everyone tells me, this wasn't really taught to me when I was growing up, right? So I had to see my parents struggle, and I guess I just got used to struggling. And that's something that you don't really want to pass on to your kids, right? So a lot of times when I meet with people, they have that sort of complaint or that sort of statement. Or sometimes too, adults don't really recognize their habits, their financial habits, their spending habits, whether it's good or bad habits. But your kids see all of that, just like we witness our parents or grandparents go through that too. So the sooner you start, the better. The sooner you start teaching your kids about the importance of your finances, why financial literacy is really important to you. And for their life. It's not just about saving money, it's about, delaying gratification too. It's different habits that you teach early on, so that way it'll be a lot easier for them as they get older. And I think it's really important for adults, and especially for kids, to set financial goals, right? So our financial goal may be different. Like you want to go to Europe, or you want to buy a new, a new purse or something. But for kids, they may want the next game. They may not. They may want the next whatever fashion or Sephora gift card, whatever it is, right? But it's really important to help them set their goals. And by helping kids set specific and achievable goals, it really teaches them that hard work, that you really have to put in the work in order for you to get that money. But also teaches them that, it's that the goals that you have, is it really realistic with the kind of finance or with the kind of income you as an adult are getting, and also the kind of allowances that they're getting too. So it really teaches them, if I have to do, if it's costing, if I only get $5 to sweep the floor, what more can I do to get more money a lot faster too? So it really helps them think in advance. I really introduced the goal setting through games. So there's so many games out there. This is just a couple that I got off the internet. But there's so many financial games just to make it really fun as a family. I encourage adults to really have a budget buddy. So, when you're talking to your friends or your family member or your significant other about your budget, your finances, I think it's important to include kids in there too, and really see that it really is just a numbers game when it comes to finances, right? So it's important to have your goals and what kind of games go along with it. If I can get $5, extra from my allowance this week, and I don't spend it for the next 5-6 weeks, I'm going to win this goal, right? I'm going to win this prize. So that's, that's a goal and that's a prize. That's part of the financial game. And it's a game that we play throughout our entire lives, right? So if you delay your gratification a little bit more, if you delay your spending, maybe there's a better sale, maybe there's something better along the way financially, or something that forces you to save towards a bigger goal as well. So it's really important to really introduce the game, because it kind of gives them a visual to look at. They see how close they are to reaching their goals, see how close they are to, or if they need to increase their allowance even more. Whatever the goal may be, whatever the game may be. Setting a budget is another game that I like to play with adults and also with kids too. So it's really important to really balance out your budget and balance out your wants and needs, right? So when we talk about budget, we want the kids to see, how much are you bringing in this month? So you only did 5 chores for this week, 5 chores for this month. That's the income you're bringing in. Just like when mommy and daddy goes to work, we get our paycheck. That's our income that goes towards our budget, right? And with our budget, we have to be able to budget our wants and our needs. Our needs are things like fixed expenses, variable expenses, like our mortgage, our car payment, paying for gas and food and entertainment. That's our that's some of our wants and needs. And then, so of course, we want to have some guilt-free spending towards, little fun things like, again, new purses or new toys for kids. So it's really important that when you talk about budgeting yourself, you talk about the big number, right? The income, the income, the money that's going out, the expenses that are going out. And for them, you want them to determine, is this a want or a need? Do you really need Chipotle every day during lunchtime, or is that a need? Or do you want to save your money for a new PlayStation? Is that a want or a need? So you really kind of determine wants versus needs. And it's really important to have both, right? So we want to be able to, we need to spend money to live, to be able to live, as mentioned before, but we want to be alive too. We want to be able to live our life and enjoy life by having the little toys, the little trips, whatever it is that makes you feel alive. So we want to determine, to let them know the responsible way of spending things. Yeah, you have to pay the necessary things first, but you can also set money aside for fun things, for you to feel alive, for you to, make it worth going to work for, So it's really important to really teach kids responsibly, how to spend responsibly, how to make money responsibly, what goes out once you receive your paycheck and stuff. So use games as a learning tool. Again, there's so many really good apps out there. It's oversaturated online, but it's really, really important that at least introduce some sort of financial game. And really, it's not teaching them just about finances. Again, it's teaching them about delayed gratification. It's teaching them about, goal setting, about critical thinking about their future and how they should invest or how they should spend their money. So it's just more than just about numbers, more than just about games, about money. And again, money management, we can't talk about money management without talking about debt. So it's really important to introduce the concept of debt and credit through interactive games, right? So one website I really like is listed on here, practicalmoneyskills.com. It really emphasizes what is good borrow versus bad borrow. So good debt versus bad debt when it comes to money, right? Is putting your new shoes on a credit card, is that a good, financial decision? Or should we just go ahead and continue to save for those new pairs of that new pair of shoes and instead of putting on a credit card, so that'd be like a bad debt. So it's really good to talk about that, and just go throughout your house too and say, you know what, we have a mortgage that's considered, a good debt, right? We still owe the bank a certain amount of money that's considered debt. So when we owe something, it means that we're in debt. So it's really important to point out, we're in debt because we have a mortgage, we're in debt because we have a car payment, we're in debt because we have student loans, we're in debt because I used my Macy's credit card irresponsibly, we're in debt because we have, account with Home Depot that we need to pay off. But these are the things. This is why a home loan is good debt. This is why, your education loan is a good debt too. So kind of explain to them, why it's good and why it's not good to have those debt. With the mortgage, you can get your home equity, you build equity, and eventually you'll be able to pay it off and you don't have to pay rent. So list off the pros and cons of those debt, but don't be ashamed of the word debt. Because when I talk to members, a lot of times they're kind of, coming in a little ashamed, a little scared, and say, you know what, I know better than to have this kind of debt, right? Like, I don't want anyone to know that I have debt. And I wanted people to kind of change that mindset. It's okay to have all these debt. It's okay to kind of, it's okay to really recognize that you have an issue with, your spending. It's okay to recognize those things. And all we can do is just address it at the time and then see what we can do to improve our, our habits and our spending future. And same thing with kids, if you got yourself into some credit card debt or whatever the situation, you say, you know what, I got myself into this. This is how I got myself out of it. This is what I learned from it. I learned, different habits, different things. And this is what I want to pass on to you. Instead of you really making those mistakes yourself, you can learn from me, you can learn from other people too. Talk about the effects of debt and how to avoid debt, right? Different effects of debt, how it affects your your ability to buy a vehicle, to buy a mortgage, or even getting student loans, So if mom and dad aren't able to help you getting with student loans, you're gonna have to try to get loans yourself. And that really, it really depends on your credit score, what your interest rates are gonna be if you're not getting federal student loans. So it really affects them, throughout their whole life. Because a lot of times, there's a statistic out there that millennials are, the average age in Minnesota for first-time home buyers, 38 years old versus 28 years old 10 years ago, right? So because of the crippling student loan debt, the crippling credit card debt that millennials are facing, other generations too, but this statistic was specifically for millennials. So it's really important to teach them how to avoid certain debt. So if you don't need a new vehicle, let's just find a vehicle that's cheaper, that's older, that's reliable, that you don't need to go into debt for. You just save your money and pay the vehicle off if you're able to in one swoop. So that's really, really helpful. Exploring savings and investment opportunities. So we played the stock market game where the kids can research different investment options and stimulate investing in stocks, bonds, and mutual funds. The stockmarketgame.org is a really good website for them to go get into. The next time you talk to someone about the next time you talk to your financial advisor about your retirement, about your investment, I think it might be a good idea to include the kids into the meeting. They don't necessarily have to say anything, just have them sit in the meeting with you. So that way they kind of get used to the verbiage, the questions that you ask, the questions that your financial advisor asks. That way it gets them used to being in the financial world and familiarize themselves with it and not be so scared to talk about money, not be so scared to talk about investment or debt. Just get them comfortable with it. Discuss the potential for long-term wealth accumulation through savings and investing, right? So as we all know, with compound interest, the sooner you save, the faster and the more money you'll get later on in life by investing a lot less than someone who started investing a little bit later too. Some of the savings options that we have here at Mayo Employees Federal Credit Union includes youth and teen certificates. The rates are really, really good right now, so it's really important to take advantage of that. And kind of, when we send out email flyers or physical flyers, just talk to the kids about that. Hey, this is what a youth and a teen certificate is. This is the difference. This is what a CD is. It matures after whatever term, right? So let's say 11 months. It matures after 11 months. Within those 11 months, you can't touch your money. You're just going to let it grow. If you withdraw the money out of your CD, CD, you're gonna, get a penalty. But we want to leave that money in there, right? So teach them that you want to let the money sit in there, let it accrue interest, so that way it makes money for you. And all you have to do is just let it, sit there, and the money is your money is working for you. So the more money you put into a CD, the more money you get out of it, right? And a 529 plan, explain to them too, I started a 529 plan for you when you were however old, or now that you're working at 14, 15 years old, let's go ahead and open a 529 plan for you. Wherever you're at in your financial journey, don't be ashamed of just letting them know, hey, you know what, I was delayed, I wasn't making enough before, I couldn't afford to get you, to even invest $20 or $25 into your 529 plan. I don't want to be too late for you, so now that you're working your first job, I want you to open up your 529 plan. I want you to open up your Roth IRA. We can explore that together. If you're one of those parents or one of those adults that really don't have that much knowledge or are a little afraid to ask, what you're supposed to do with your money, then it's okay. Just bring them along with you to your financial advisor meeting, and you can meet with Fidelity. We have Satara here with MEFCU. Then they'll be more than happy to sit down with you and explain all these terms and all these things with you. And also, again, please bring your kids just so they know they're getting used to the terms. They won't be afraid to ask about it when they get older too. Again, don't be afraid to start wherever you're at now. And if you don't have the funds to start a teen certificate or a teen account or a youth certificate, youth account, or a 529 plan for your kids, don't be scared about that. Don't be ashamed. Just eventually you're going to be able to, invest $20, $25 a month or something to get started, right? But don't say, you know what, I feel terrible that I haven't started this yet. It's, as long as you start something for them, I'm sure they're going to be absolutely, grateful for it, but also include them in that decision as well. Earning money responsibly, engage kids in chores, right? So I have a 3-year-old, he's doing some chores already. He's working for some screen time versus money. He doesn't understand the concept of money yet, but he's working for, some 15-minute screen time here and there. So that's what he's working for. But it's really important to discuss the value of hard work, responsibility, and saving a portion of those earnings. So, you can adjust some of these earnings, some of these chore prices, adjusted according to inflation. So it might be a good idea to talk about inflation, right? So just one second here. So maybe emptying the dishwasher is not 75 cents anymore. Inflation went up. So you can talk about how inflation affects everything, right? So it's a great opportunity to really, teach them how to empty the dishwasher and why it's important to do that, why it's important for you as a kid to contribute to the household, and it's why it's important for you to explain to them about money. You did something, you did work, you did your chores, so this is what you earn from that chore particularly. But you know what? Inflation went up, so maybe now it's 84 cents instead of 75 cents, right? And maybe you can negotiate with them too. So it's always good to introduce so many things. The art of negotiation, my 3-year-old, I think, has perfected that already. But it's a lot of fun to see what their thinking is. It's good to ask, what inflation went up? How much do you think you deserve to be paid for this service? For emptying dishwashers, is that 75 cents kind of work, or is that a $5 kind of job? Or cleaning the bathroom sink, is that $1.50 worth of chores, or do you want to negotiate it a little bit? And why is it? Why do you pick that number? What makes you think that you deserve that much? And it's a good idea to really open up and have them really think about what kind of chores or correlate chores and hard work and the rewards coming from that, right? The reward would be for money, and then they can use that money towards their investment, their financial goals, their savings too. So many things that comes from that. So it's really, really fun to play these little games with them as early as possible. Earning money responsibly, again, engaging kids in different chores. So for example, 18 months to 3 years, they can pick up their toys, help wipe down counters. 4 to 6, they can clean their room, water plants, help with dinner preparation. 7 to 10, take out the garbage, help with the yard work. 11 to 13, they can start, cooking, help you cook dinner. Help with home maintenance and things like that. 14 to 17 is typically when a lot of people or a lot of kids are getting their first job, especially in the summertime. It's June, so they may be looking at, outside of the regular babysitting job or what have you, they can be working at fast food, retail, places like that. So it's really important to talk to them What goes into your pay stub? What are you gonna, even though you're making $16 an hour, or let's say if you're getting paid $200 for this paycheck, right? It's $200, but what's left over, you're probably only getting like maybe 120. So it's really important that they know that, yeah, you're expecting a $200 check, $16 times however many hours, that comes out to $200 for that paycheck. You're not getting $200 a paycheck because you have to pay taxes. You have to pay towards, federal, state, whatever that may be. So this would be a great opportunity for you to introduce that kind of discussion with them. But if you are, if you're the parent or you're an adult who's also having a hard time understanding these things, is a good time for you to research or, chat with someone like me or anyone else in HR that'll be able to walk you through why these taxes are getting paid, what the percentage are, why that's important to pay those things, right, to help the community, things like that. So it's a good time to discuss, whether you want your money to be direct deposit, you want a paper check, or how do you want it to be paid? What goes on to your pay stubs? What is on your pay stub? Is your name correct? Your social security number? Your address, things on there, just a very basic. We just can start out with the basic things, what's on your pay stub, and then really get into more details. Why do we have to pay FICA, things like that. And is your insurance taken out? But, you're still a kid, so you're still under my insurance. This is how much I pay for you or for us as a family for medical insurance, dental insurance, whatever kind of insurance we have. So it's a good idea to introduce that too. Compare their pay stub to your pay stub and say, you know what? I know that I tell you I make $100,000 a year, but this is how much I clear at the end of everything. And it's it's roughly about $70,000. And this is why we can't just buy you a brand new car. This is why you have to work and contribute to that car too. So it's really a good idea to really read the pay stub with them, try to understand it yourself, teach them, compare the two pay stubs and explain to them that, yeah, $70,000, $100,000 may sound like a lot of money, but after expenses and stuff, we're kind of just barely scraping by. So it's really important that you understand that why we have to go to work, why we have to, contribute to our household expenses. And help them create their first budget. It's really important. And if you yourself need help creating a budget, then you're more than welcome to reach out to us. We can get you, meeting with a financial wellness counselor so we can help you budget for yourself and then teach them how to budget their first budget too. Or better yet, just bring them in. Just let us know that you and your child or children are coming in to kind of teach them to do their first budget. So. Making smart spending choices involved in purchasing decisions, that's really important. Even for smaller items like snacks and toys and books, delay the purchase of items over a set price point. So practicing your mindfulness and money saving skills, and also delayed gratification is really, really important for pretty much everything in life. Have them calculate. Another thing that I like to play with, a game that I like to play with teenagers and kids and stuff, how much work did you have to put in order for you to afford that Chipotle bowl? Say a Chipotle bowl is $15 and you're getting paid $16 an hour. How many hours did you have to work after taxes? Were you able to pay for that $15 bowl? Was it 2 hours of work? So that one bowl that you're eating for that one meal is 2 hours of your work, 2 hours of your time that you put into work. So think of it that way. Just don't look at a number. They look into their account. They say, you know what, I have $100 left to spend on food. But instead of just saying, you know what, I only have $100 left, just think about how many hours you had to put into work in order for you to have that $100 in your account, right? So just look at it this way, that way. That time is really, really important too. So it's important to really delay certain things. If you can buy something cheaper, that equals less time for you, then by all means do it, right? If that's important to you. So it's important to have them see money in a different viewpoint or point of view, not just by numbers that's in the account, right? But by time, by emotions, the time that you have to drive to work, the time you have to spend at work, time you have to drive out back from work, things like that, planning your life around work. So it's just more than just a Chipotle bowl. So we want you to plan ahead for learning opportunities. Things like having cash on hand helps them see where money is going. A lot of times we're dealing with the cash apps, we're dealing with Venmo, Zelle, things like that. So we're really touching real money. My son is 3. We were eating a salad and he said, where does salad come from? And I said, well, salad has, lettuce, tomato, things like that too. So it's kind of like that with teenagers too, just really having them see where money really is coming from. Not like, the situation where it's grown out of dirt or grown on trees or however they say it. But it's really an opportunity to really touch it, right? So this is what $100 bill looks like. This is what $20 bill looks like. Just really break it down to the basics. Just really seeing, just break it down on how they're gonna spend that $100 and how that $100 really feels. If you're seeing $100 in ones versus $100 bills, make it, physically it looks like it's a big difference, but just know that once that money is out of your wallet or out of your pocket, that's all you have left to spend, right? So it's really important to actually let them see physically how the money disappears. The more they spend, it just kind of disappears. So it's really important for them to see that. So toy register can help them teach about paying for items as part of play too. Play the Price is Right game. It's really important. Teach them about price comparison. If they're complaining about getting new shoes, just let them know, hey, those new shoes, how much you think it costs? Is it going to be $20? You think it costs $20, but it's actually like $120 for you. So it's important to say, you know what, that mayo, that bottle of mayo that I got you, is that, or you got the family, do you think that's $2 or do you think that's like $8? It's really important that they understand the price of things. Gas is expensive, so you want me to drive you across town to see your friends instead of you riding your bike or you, riding the bus or something. Just calculate how much that will cost in gas, things like that, so they know exactly, how expensive life is. Right, so add things up throughout the day for them. Have them determine if something is a want or a need when grocery shopping. Do we really need that, bucket of ice cream, or can we just get a little thing of ice cream for now that we can just, eat? Or is that a want? Is that a need? Do we need, new, like another tub of whatever when we have that at home, another thing of lotion when we have like 4 bottles at home? So wants versus needs, right? So it's really important to teach that as early as possible, because when I meet with people and I see their budgeting or I see what they're spending money on, it's really hard to break that habit when you're a little bit older. Financial choices to consider: discuss checking and savings account. This is a big step in your kids' financial literacy journey. When they get there, do you want to open up a savings account for them or a checking account? How old are they? Are they responsible enough? Or is your name going to be on it too? So it's a good time to open a checking account when your child starts their first job and determine the best way to manage the account. At age 15, roughly, it's a child can have their own checking account with us. Parents are joint on there so that you can monitor. A savings account can be set up as soon as your child has a social security number, so that can be opened up anytime with your name on it too, as so you can monitor their account also. But also, once they hit 18, do you want to be on their checking account? Did you know that you can take yourself off of their checking account? Just know that if there's any fraudulent activities on their account, or if they commit some, if they do something where their account is negative, then, your bank or our credit union can also take money out of your account, your personal account too, as the parent, because your name is joint on their account as well. Did you know that you're legally responsible for that? And also, when you're co-signing something for them, when they turn 18 or 19, whatever it is, do you know that you're financially responsible for that too, legally responsible to pay for that debt back too? So just that's something to discuss as well. Understanding their money habits. What are some of the things that you spend money on? Do you spend money as soon as you earn it? As soon as the $200 from your first paycheck is deposited, what did you do with that? Did you spend it all right away? Did you sit down and be strategic about it? Did you say, you know what, I'm going to go ahead and put $100 in savings because I want to get this, this, and this, or I just want to invest in the future? Or did you, not touch it up in fear of losing all the money? What's your financial habit like? Because look over that with them, talk to them about it, and why it's healthy and unhealthy habits. Do you make impulse, purchases? Why did you do that? Were you having a bad day and just want to get something to make you feel better? Then that might not be a healthy coping mechanism. Maybe we should look into a different coping mechanism versus you spending money to get that, dopamine hit. Do they know where their money went last month? Were they budgeting? Were they keeping track of their money? Were you yourself budgeting? Were you yourself keeping track of your own money? So when you're sitting down doing your budget, it's a good idea to have them sit down and do their budget right along with you. Just so you can be on the same page and kind of walk them through, hey, you know what, let's not spend all your money. I know that, some things happened last week or last paycheck where all your money, you spent all your money, but let's just do better. Let's work on improving on this paycheck and save a little bit more because we want to go on this vacation. I know you want this new PlayStation, whatever it is, right? So kind of walk them through it and kind of have them focus on the future a little bit more too. But still allow them, give them a guilt-free spending budget, right? Out of your $200, you can use $50 to spend on whatever you want without question. That's just your fun money, right? So have your fun money, have your fun life money, and then also have your investment and your savings too. So it's really important that you talk to them about that. Financial choices to consider: explain the benefits and risks of credit cards. This is a good one to start when they're about 15, 16, 17. It builds, you can put their name on your credit card as a parent, as an authorized user. And what that does, it builds their credit score and may have other rewards for them to use too. Parents can have kids on their credit card as an authorized user, and it's a good option for emergency spending. Overspending and debt can be a concern, so discuss this with your child. Some of the pros of doing that is it builds their credit history really early on if the parents are paying it off on time, right? So it depends if you're responsible, you the parent are responsible with paying your credit cards on time, things like that, then it'll be good for the kids too. It gives them a longer credit history, which gives them a higher credit score. And teens can learn about billing cycles. When is the billing cycle due? Is due every 30 days? Is it due on the 27th of each month? If it's due on the 27th, what day do you have to pay it? The 27th. When is it considered late? Well, maybe it's a 5-day grace period. How much is the late fee? Things like that. So it's a really good idea to really read the credit card statement together. So let's say, if there's a balance of $1,000 and you can't pay the whole $1,000 off, what happens after that, right? Your interest charges hit. What is your interest rate? Teach them how to look into that. Where do you find that in your statement? Where do you find that in your contract? So look over your statements together. What is the percentage of interest charge? What is the amount actual? Is it $9, $20 for this pay cycle? And how much is the late fee? Things like that. So it's really important to go over that with them and teach them really early on. Or, about 15, 16, 17. The cons of that is parents are responsible for paying back the teen's spending, whether it's $5 or $500. And if you're not good at paying your credit card back on time, it can also damage your child's credit report as well, credit score. And it can come up, you can have disagreements on spendings, limits, and habits. You told me you were going to use my credit card to buy more Chipotle this week, and you bought Chipotle again. That's a good discussion to have, that, we set boundaries. We have financial boundaries. And if you continue to step over those boundaries, if you continue to not listen to me, then that's considered financial abuse. So let's not take advantage of my, kindness and not continue to use my credit card. So you need to really set those boundaries with them and teach them also that financial abuse is still, financial abuse in the future is still really important to look out for. When you have, eventually they're going to grow up and say, if your partner is really taking advantage of you financially, that's considered financial abuse. So really teach them early on to what that looks like, right? Cultivate generosity. So charity drive challenge. Kids can help raise funds and donate items for charitable causes, so they can help drive, let their friends and family and neighbors, church members know that, hey, I'm, trying to raise money for this charity. So, $1,000 towards the charity can help them with this certain, whatever it is, right? So it's really important to cultivate a generosity, cultivate generosity when it comes to money and donations and things like that. Instead of gifts for birthdays, you can ask for donations to local animal shelter or volunteer their time at animal shelter or fundraisers. Discuss why you should give back to your community, the importance of that, and your causes, and the causes that you and your child are passionate about, right? So if you love animals, you can try to raise a fundraiser for the animal shelter, or you can volunteer your time too. So it's really important that not only are they just investing to the future, they're also donating their money to whatever is important to you and your family. And discuss building credit awareness, really discuss what credit is and why it's important. Talk about how they can build their credit once they get their own credit card. What is the process of getting a credit card? Do you know your social security number? Do you know your date of birth, your address, things like that? That's what goes into a credit card application. What does that look like? What does it mean if you get denied or approved? And what does it mean if you get approved for $300 credit limit as a starter limit, or $3,000 or $30,000? So you spend all that right away. If you yourself are having trouble understanding that, you can visit myfico.com to try to learn more about that too. Talk about what will help them maintain good credit. Of course, good payment history. Explain how it can affect them in the future, whether you have good credit or bad credit. So credit is really important for on the financial literacy journey. Of course, you always want to make it fun and engaging. You want to create your own games and flashcards if you want to, but there's a lot of online apps out there that you can get on and play with them too. Best age to introduce credit games is probably about 4 or 5 years old, right? So if I give you $10, if I'm lending you $10 and you're not able to pay me back next month, but you want to pay $2 a month for the next 5 months, but I want to charge you interest. So what is, if I'm charging you 50% interest of that dollar, how much is that interest going to be on top of your payment that you're going to pay me? So just kind of have that concept in their head already, right? Use stories. Talk about your credit story or someone else's story, something you read or you learned online. There's so many stories out there. Help them envision their credit story. You can draw it out or write it out and correspond with their financial goals. Saving for the future concepts to introduce. Use a fun and visual savings tracker. It's always fun. You can, I'm currently potty training, so I have a visual tracker, visual chart that if you go a certain amount of times, then this is your reward, right? So you can do the same thing with saving tracker, and just to see how close they are to their goals. Incorporate goals at certain milestones, halfway or once they hit $40 increments, whatever it is between you guys that you set up. So set up long-term goals and short-term goals. What is long-term? What is short-term? Just start with the very basics. Short-term can be something like 6 months to a year, or it can be something as short as a month to 2 months, right? So summer is only 2 months or 3 months long. How much do you want to save in the short term by the end of summer? Do you want to save $1,000 or $2,000? How much do you need to save from each paycheck, or do you need to save the entire paycheck in order for you to reach your goal? So it's really important to introduce that. And then for long term, where do you want to go to college? What kind of vehicle you're going to need to go to school? What do you need? How much do you need to save for the move? Things like that. So it's something to really look forward to. 5 years may be long term for them. For us, long term would be something towards retirement, but for them it can be going off to college, saving for their first apartment, things like that. Skills to teach for financial success: how to stay on track, how to stay consistent, how to be consistent with paying things back on time, how to speak up for yourself, or call the credit card company, or call the light company if you can't pay it on time, whatever it may be, right? So it's really, really important to teach them to speak up when you need help. Speak up when you don't think you're going to be able to make your payment on time. You want to pay your savings first. So always have people list off their financial goals as part of their bills too. You have to pay your bills every single month. So list off your financial goals, your savings goals as part of your bills, since you have to pay that every month too. Give savings a purpose, goals, right? Celebrate consistency, not the amount. You consistently save the last 6 months, although you didn't hit your budget, you didn't hit your goal for the 6 months, you're about $50 short, whatever it is, still celebrate their consistency. You did what you can at the time. And you know what? We had a little hiccup here and there, but you still save every single month. So let's go ahead and celebrate that together. Saving for the future, a budget and how to track spending. So you want to start simple. Just write down on a piece of paper and start that habit early on. How much is your income? What is your paycheck this paycheck? Or how much was your paycheck? How much is it this month? And what kind of bills do you have coming out? Include kids as part of your budgeting meetings, as mentioned before. Explain compound interest and the benefits of saving early. So your money earns money for you. That's the basics of compound interest. So when you save, you earn interest. You start earning money on both the money you saved and the interest earned. So it's kind of a weird concept to try to explain it, but you just have to list it out. The sooner you save, the more it's just going to continue to grow and grow for you. You don't really necessarily have to do anything with it, just as long as you keep depositing money. Even if you don't deposit another penny into the account, kind of show them, there's a lot of calculators online, show them how much it'll be in about 10 years, 15, 30 years, things like that. So it's really important. It's really fun to really show them, if you don't touch this amount, or if you contribute this much for the next 10, 15 years, how much you're going to have by the time you're 30 or 40 or 60. Explain to them also time is more valuable than amount, and also consistency is very important too. So the earlier you start, the less money you have to save up front, right? So this kind of gives you a chart Same for the future. So if you started saving $60, in order for you to hit $1 million by 65, giving them 10% annual return compound monthly. If you save at 15 years old, $60 every single month. You put $60 into an account every single month from the time you were 15 to 65. You only have to invest $36,000 total investment, and then you'll hit $1 million by 65. But if you start at 45, in order for you to hit that same $1 million at 65, you would have to put in every single month $1,310. And then if you start at 55, in order for you to hit $1 million by 65, you'll have to put in $4,800, $4,850 each month. So it really kind of breaks down and say, you know what, just be consistent. Just start when you were young as possible, and then just keep investing into it. You don't even have to invest that much, right? And versus someone that's trying to catch up a little bit later. Parental guidance and support. You can help your child build the skills for a solid financial foundation. So you can model positive financial behavior and provide guidance often. And even if it's not positive, even if you have a little hiccup yourself, it's important to recognize that you know what, I went over my budget this week, so this coming up week, I'm going to go ahead and adjust my spending and my savings a little bit. You know, life happens, things happen, and you know, we have different seasons in life, we have different financial seasons where things are just going to cost more certain seasons in life. So it's okay to have a little bit hiccup, but this is how we're going to adjust. This is how we're going to get back on track. We can always adjust our goals a little bit too. You want to encourage open communication about money matters within your family. So, you know, again, really talk about, make it a habit, make it a positive thing to talk about debt, to talk about finances, to say, you know, explain why we can't afford to get you new shoes, you know, those new $300 shoes that you want in about a month because we have car insurance that's coming up, things like that. So it's really important to have that open communication with them. Advocate for financial education. So advocate for the inclusion of financial literacy in your school's curriculum. Highlight the benefits of early financial education, you know, so it just really instills that habit, that early habit, and for that early thinking for them. Engage and support things that further your own education too, like this presentation or other presentations online. It's the, you know, online realm is oversaturated with a lot of personal finance information, so you can find it in so many different places. So you just need to commit yourself. You can also commit maybe an hour a week with your child or an hour a month with your kids to really learn more. So you know what, I want to learn more about investing. Why don't we just go ahead and do some research together and see what we can figure out together, okay? You know what, I'm not very good at savings. What are some of the savings ways that you and I can keep each other accountable to save a little bit more too? You can leverage technology for learning, so use educational apps, so many good apps, so many good games out there and online resources. So a lot of them are, you know, interactive too. Learn from financial mistakes. Again, be transparent with your kids, right? Talk about it. Emphasize the value of learning from mistakes. Not just about money, but anything in life is kind of is like that, right? Mistakes are a chance for you to make positive changes with your finances and with your habits. And then maybe they're picking up on something that you don't recognize. You're saying, you know what, Mom, I noticed that you get coffee and you get so many other things on Fridays. You kind of overspend on Friday a little bit. I think you need to reel it back in. So maybe they notice that about you and you don't recognize that about yourself. So it's really important that, you know what, I think you may be right. I think we can audit the accounts together and see why I do these things, why I overspend on certain days. You know, is it because I'm stressed from the rest of the week, or what do I need to do to have a healthier coping mechanism? Encourage your kids to really reflect on past financial decisions that they made and how they might have made it different choices, like spend their first paycheck the first day they get them, or did they put more on their credit card on your credit card than they intended to, and how are you going to pay that off, you know? So just really help them. Let's take a look back. Let's audit your accounts. What can we do differently? If you didn't meet your financial goal for this month, what could have you done differently, you know, with your spending habits, with your finances? And it's important for you to look at yours as well. Develop skills for financial independence. You want to promote savings culture, so make it part of their routine. Incentives like earning money for chores, milestone visuals, it really helps them. Again, celebrate the milestones and achievements and consistencies. Talk about your own savings goals and have family check-ins, whether that's once a week or once a month, whatever it may be. Just as long as you're sitting down as a family and be open and communicate about finances. You want to foster entrepreneurial skills as well. Encourage this interest through Business Builder Challenge, where they can develop and launch small business ideas. I think we had like a lemonade day here in Rochester a few days, or this past week or coming up, where kids can, you know, sell lemonade and make money. So it teaches them how to how to make money, it really fosters their entrepreneurial skills. So it's really important that you talk about that too, that you don't necessarily have to work for anyone else when you get older. You can be an entrepreneur, you can have your own business and stuff. What does that look like for you? What does that entail for you? Not every parent works for other people. A lot of parents or some parents have their own business too, so really talk about that. So just let them know they're their own chief financial officer of their own money. So they're responsible for their money, responsible for their financial future too. You're just guiding them along the way. Sustaining financial wellness, you want to emphasize the importance of lifelong learning, continue to work towards better financial literacy, no matter how old you are, and no matter where you're at on your financial journey. So connection between mental health and finances. So financial stress can significantly impact mental health being, leading to anxiety, depression, and other mental health issues, right? As we know, aside from infidelity, money is the second reason for marriages, ending. So it's really, really important that they really have a good understanding about that and how money and finances have a strong connection. So teaching your kids how to manage your finances responsibly can help alleviate stress, promote overall mental wellness as they grow into adulthood, because they know how to handle it responsibly. So even if you didn't get that opportunity yourself, it's a great idea to teach them that too. Discuss how important it is to reach out for help when needed. You yourself as an adult need to show that as well. You know what? I need help understanding my credit score a little bit better. So I'm going to reach out to a financial wellness counselor and we can have a conversation. We can have a meeting together. You can join me in that meeting so we can understand this together. And so it's not a bad thing to ask for help. Different resources for helping continue education. You can meet with me or other financial wellness counselor. Tools to help parents teach kids about money. You can go to gohenry.com. Bankaroo app is a virtual bank for kids to help them keep track of their earnings and spending. So again, so many different apps out there, so many different charts out there that you can use, that you can introduce your kids to. But it's really, really important that you're right alongside with them, trying to understand or trying to teach them from your own experience as well. So this really concludes our presentation for today. This is my contact information, so if you can't, write this down now, you can always go to our website. It's mayoemployeefederalcreditunion.org, and in the financial guidance tab of it, you can find my contact information there as well. Do we have any questions online today?
Yeah, so I was wondering, my kids are pretty young still. My oldest is 5.5. Sometimes she gets money as a birthday gift, which is always nice, but I'm always like, where should I put this? They think it's really cool because it's a $50 bill, but I'm like, should I put this in their savings? Should I let them pick out toys? I know in the past when I've spent it on something for her, but she didn't see me do it, she doesn't associate that with that was my gift, because her sister got the same amount a few months later and she wanted it. And I'm like, no, that's your sister's. So what do you think is best to do when they get money? Like invest it, spend it, maybe a little of both?
Yes, absolutely. I think that's a little of both, or in three categories, right? So if you're, in this example, if she's getting a $50 bill, let's go ahead and just, really split it up and just get $51 bills and say, you know what, this is what $50 looks like, right? So I know you're 5.5, 50 sounds like a lot. So you're gonna see $50 bills split out. So out of $10 out of $50, just take out 10 ones and say, this pile right here with 10 ones, $10 of it, we're gonna go ahead and donate it, right? And then maybe $30, and what's left over? You have $40, right? So maybe $20 of that, you count out $20. This is a stack for $20. We're gonna put this into savings, and that means that we're gonna save this for something in the future, whatever it may be. And then the remainder $20, you can say, this is your $20 bill. This is all you have left to spend. Do you wanna get ice cream? Do you wanna get a toy with that? This is what you got from grandma, and this is how we're gonna split this up. So now you have a choice. You can choose your own financial goal here. So you want to buy a toy much later, but it's more expensive because you don't have the $50 money to buy it now. So we can put that towards your financial goal. And then with this remaining $20, do you want to spend it now? Do you want to put it more towards savings, or do you want to go ahead and buy a toy and get savings? So later, when it's your sister's turn, when it's her birthday and she gets $50, she's going to get the exact same $50 $1 bills, and then you can split it up for she can help you split that up for her sister as well. So it may be a hard thing to understand for a 5-year-old, but at least they can see what 50 looks like. So 50 little pieces of paper, you can't use it all right now, right? So you have to put something towards a certain amount towards that. So I think it's a good idea to maybe to put it towards a savings and a small portion of it towards current spending too. Does that answer your question?
Thank you.
Okay, thank you. All right, well, thank you so much for your time today, whether you're online now or a little bit later. If you have any other questions, please reach out to us. And again, my name is Soka